Oh, motorcycle.
No, wait, stop! It's a trap. Hi, I'm Captain Mark Inza. Today we're going to cover the 5 financial mistakes you need to stop making uniform today. Disclaimer. The opinions expressed in this video are for education and entertainment purposes only and does not constitute financial, accounting, or legal advice. I am not a financial advisor, accountant, or lawyer. I cannot promise the information shared in this video is appropriate for you or your situation. Honestly, I'm really not qualified to teach you anything about finance. With that said, let's get started. Mistake number 1, misusing a zero-down loan. Here in the Rhode Island National Guard, you probably have access to zero-down loans. But with great power comes great responsibility.
Wrong video, sir.
When used wisely, a zero-down loan can be a powerful tool for growing your net wealth out of thin air, literally with nothing. But without a sizable down payment to make you stop and think about what you're about to buy, it's really easy to use zero-down loans to get yourself into too much debt. Seriously, without that large loss of savings from your account, sometimes your self-preservation instinct doesn't quite kick in time. One common rule of thumb you've probably heard is that servicing your debt should account for about 1/3 of your annual income. However, everyone's debt situation is a little bit different, and you need to find a level that's comfortable for you. Me personally, I have to be a little bit more risk-averse than that. I spend approximately 20% of my monthly income servicing debt because it's only a matter of time before my boss notices I have no idea what I'm doing. Financial mistake number 2, related to number 1, is paying too much money for your money. I invite you to think of interest rates as the cost of borrowing money. For example, if I buy a $40,000 car at 5% interest over a 60-month term, I'll end up paying back to the institution $45,000. That's how banks make their money. But expensive debt is bad debt. For example, some institutions might charge you as much as 20% or more for that same car loan. Take the previous example. If I had paid a 20% interest rate on that same $40,000 car, I will have paid back $64,000 to that financial institution. If you find yourself trapped in bad debt, there may be relief for you. The Service Member Civil Relief Act caps all debt acquired prior to an active duty activation to 6%. So anything you sign after you get on active duty, that's yours.
Right.
But if you sign it prior to going on active duty, it gets capped at 6%. For the National Guard and the Reserves, the SCRA is a powerful tool for digging yourselves out of debt. The first time you activate for initial entry training, when you deploy to go overseas, or in rare cases, activate for a year-long worldwide pandemic response. If you find yourself caught up in some high interest rate debt, or some variable interest rate debt, which is just another way of saying it's going to be high interest rate debt, maybe the SCRA is for you. Talk to a financial advisor. We'll put links in the description below. Financial mistake number 3 you're making is not taking advantage of your matching TSP contributions. If you enlisted after 2017, or you opted into the blended retirement system, you're entitled to up to 4% matching into your TSP. What that means is our employer, the Department of Defense, will match your contributions into your TSP account up to 4% of your base salary. If you have any questions about how powerful a tool the TSP can be, I encourage you to watch our video here about becoming a millionaire in the Rhode Island National Guard. Even if you're not enrolled in the blended retirement system, the TSP is an incredibly powerful tool for saving your money. Out in the open market, a mutual fund may charge you as much as 1% handling fee to manage your money. Comparatively, the TSP charges you 0.039% to manage your money. For example, if I had $100,000 in my retirement's account, out there in the open market, I might get charged $1,000 a year to manage that money. Comparatively, the TSP only charges me $39 for the same service. And because the TSP is an appreciating asset, you can be more risk tolerant with it. For example, I'm extremely risk tolerant when it comes to my TSP and try to max every single year. I was late coming into the savings game, and now I'm locked into the Bruce Arians School of Business. No risk it, no biscuit. Financial mistake number 4 you need to stop making today is paying too much for healthcare. Listen, healthcare is expensive, and it's even more expensive when you go to use it. Just when you think you can't wring another penny out of your withered bank account, you go and start a family. Families aren't cheap. The good news is TriCare Reserve Select is a healthcare plan for reserve component service members who like having healthcare, but also like having money. There isn't a ton to say about this. It's healthcare. But if you're okay working inside a slightly smaller than average network of providers and pharmacies, there's a really good chance TriCare Reserve Select could save you a ton of money on your monthly bills. And this is especially true if you're single or have a very large family. However, changing healthcare plans is a decision that requires a lot of attention. This isn't just a question for you and your financial advisor. This is you, financial advisor, and your medical provider. It so happens that TriCare Reserve Select was a great choice for me and my family back when I was eligible, but it may not be the right choice for you. Check out the description below for a link to TriCare's website, and you can start reviewing this for yourself. Financial mistake number 5 is overusing or underusing the tax-free purchases on base. As you may or may not already know, purchases made at AFES or the Navy Exchange are tax-free. This could set you up for some serious savings if you use them over time. For example, here in Rhode Island, we have a sales tax of approximately 7%. If I buy everything ever at the Navy Exchange at the Newport Naval Base, I could set myself up for some serious savings over my lifetime. But The Navy Exchange and AAFES may not be competitive for the specific brands and goods that you are looking for. Some examples of this might be electronics or clothing. I'm looking at you, Fort Meade AAFES circa 2015. But off-post retailers can often beat the 7% I would save on sales tax during their big annual events. So, there probably is no definitive answer as to whether or not you should be shopping on or off-post. The right answer here is that you should be clever and shop at both. But these were just 5 financial mistakes that we came up with. I want to hear from you. Leave us a comment below and tell us how you stay out of financial traps.
Car loan? Oh, motorcycle.